Have you paid for an expense in cash and want to know how you may still be eligible to claim it on tax? Today I'm going to tell you how. Hello everyone, my name is Ethan Rooshocks and today we're going to be talking about cash expenses here in Australia. So an interesting topic. A lot of people hear of paying for something in cash and their eyes light up when it comes to saving themselves some money maybe, and then they realize, oh, it's going to cause a tax nightmare. So I'm going to talk to you today about how you potentially can claim cash expenses, what cash expenses actually mean, and what parts of this is highly illegal and you should avoid. Now, the first thing that we're going to have to define is what cash expenses are, and there'll be two different things I'll be talking about. One is going to be completely legal and you'll be able to claim on tax. Two is illegal and you should avoid dealing in at all. So the one that we're going to be talking about is when you've got a legitimate expense and you just happen to pay for it in cash. So just because you've paid for something in cash doesn't mean it's not claimable. So you can go to a store and go and buy a laptop and pay for that with cash, and that may still be claimable if the thing you're buying is deductible. Now, the same could happen if you maybe go pay for stuff in cash to maybe an op shop, or if you're a reseller, you may be going to a garage sale and stuff. That's going to be the interesting stuff I want to touch on. The other side is when you're doing a cash job as such. That won't be claimable, it's illegal, you should avoid doing it. So that is where you maybe go up to a tradie and you go, oh, how much will you do it for cash? And that is you both avoiding the tax system, and really you're just cheating everyone out of the system because they then offer you a discounted price. They're not paying GST, they're not paying taxes, you're getting a cheaper price. It makes it hard for the person trying to do the right thing. So obviously that stuff's illegal, not claimable, and we're not going to be talking about that. So if that's what you've joined the video, go watch one of my other videos because we're not going to be talking about that stuff. We're going to talk about the legitimate deductions you can claim that you pay for in cash and what records you need to keep. So I'll bring this up from the ATO because this is really interesting. It talks about what records you need to keep. So you need to keep a receipt normally from the supplier of the goods or service, and it should show the name of the supplier, the amount of the expense, the nature of the goods or services, the date the expense was paid, and the date of the document. So this is ideal. If you can get a receipt that shows all of those things, you know you're covered. So let's jump into each of those things, explain what they really mean. So we've got the name of the supplier, which will just be the person or the place that you've purchased from. The amount of the expense is going to be how much you've paid. The nature of the goods or service. So normally this would be some kind of brief description on what it is. So was it for a laptop? Was it for some plumbing work? Just something to explain what the transaction was for. You've then got the date the expense was paid, pretty straightforward about what the date of the transaction was, and maybe the date of the document, so when was the invoice issued. So they're the things that you're looking for, but there are going to be situations where you can't get all of that, and this is where we jump into the next part. So they do have a few exceptions here, and this is where these situations may come in. Now, the big thing with this, an exception doesn't mean you can just automatically claim a deduction. It's just that they're recognizing there are going to be some circumstances where it may be hard for you to get a record that suits that. But if you can satisfy that the expense was actually made, then you can still claim it. Now, before I jump into the next part of the video, I do want to talk about my NFT project, Rooshocks. I just want to quickly touch on it because I really feel like this NFT project is changing the game for how NFT projects should be run. It's a project where you can get, for instance, 3 tax returns done and own an NFT. I'd love for you to go check out the website. There's still plenty available to purchase. And if you've got any questions, make sure you send me a message and I'll explain how the project works for you in particular. Anyway, let's get back into the video. So the main things you're looking to prove is that you've spent the money and you're entitled to claim the deduction. So the more proof, as in a receipt, is ideal. The less proof, the less ideal it is. But obviously the more details we can have, the closer we get to being in the same situation as a receipt, and therefore much easier if we get an audit to justify your claim. So for instance, we use a great example that I deal with when I have reseller clients, and they may go to a garage sale, for instance, and they're buying goods that they're going to resell. Now this is a legitimate deduction for their business. They're spending money on goods that they will resell. So this is the cost of sales, it's a purchase of stock. Now the hard part is that if you go to a garage sale, you're not likely to get a receipt. So what can you do? So you can do things such as, well, you could keep your own receipt book where you're going to keep the date of the transaction, the amount of the transaction, what you purchased, and maybe you might even use, say, the address of the garage sale. That may help you. Some people like to take a screenshot of a Facebook marketplace listing as a backup. Some people may cut out the thing out of a newspaper that shows the date of the garage sale and the address to help build proof. The more proof that you can get, because the onus is on you as the taxpayer to produce evidence of your transaction. So the more proof you can get, the more likely you are to pass an audit. Other people may have, say, a bank statement or a debit card statement that shows the transaction, so at least you can prove that you've paid it. The biggest issue with this is that, say if we have fuel, for instance, and we go to a petrol station, you still want to keep your receipt, because if you get an audit done and they go, okay, you spent $150 on fuel, how do they know you haven't done a cash withdrawal within that, or maybe food and drink that wasn't claimable? Hence why a receipt is ideal. If you don't have it, the ATO are more likely to accept that if that's a once off. So say if you've got 50 fuel transactions a year and you've got 47 or 48 receipts, and you can see a good pattern, there's a couple you're missing, you're much more likely to pass an audit than if you go into an audit and you've got 1 or 2 receipts and then you're trying to make up the other 47. So the more evidence you can have overall, again, puts you in a better position. And the other thing with cash expenses is, again, there's nothing wrong with paying cash, but if you're paying cash to somewhere where it is likely that you would be issued with a receipt. So if you go to Kmart and spend cash, you can get a receipt, then you need to make sure you've got that receipt. It's only really if you're paying cash for things that are those odd purchases. They're maybe from someone that's not a registered business and they haven't issued you with any kind of statement to say that and you've paid cash, that you may want to keep some of your own records. And the more details you can keep about the transactions, the easier it is to clear your name in an audit. I hope that's been interesting to you. Make sure you go and check out some of the other content on my channel. Hit the like button, hit the subscribe button. I thank you for watching, and I'll talk to you again soon.